Welcome to our Q4 2025 market review. I'm Griffin Sheehy, the portfolio manager here at Willow Creek. And over the next few minutes, we're going to look at how your investments performed this quarter, put those results in the context of long-term returns that truly matter for your financial goals, and show you exactly why staying invested through uncertainty is the most powerful wealth building decision you can make. The numbers tell a compelling story. Let's dive in.
Let's dive into what happened in the fourth quarter of 2025, and it was quite a story. Across the board, stocks delivered strong positive returns, with international markets leading the charge. International developed stocks returned 5.2%, emerging markets came in at 4.73%, and US stocks gained a solid 2.4%. What's particularly interesting here is that while US markets have dominated for years, we're seeing international markets finally starting to show their strength. The one outlier, global real estate, which dipped slightly by about 0.81%. A reminder that diversification means different assets move in different directions. On the bond side, we saw positive returns as well, with US bonds up 1.1% and global bonds gaining 0.52%. This is significant because bonds were providing both stability and returns during the quarter. Now I want you to notice something at the bottom of this slide, the historical context. Since 2001, the average quarterly return for US stocks has been up 2.5%. This quarter's 2.4% might not seem spectacular, but it's right on track with long-term averages. That consistency matters for reaching your goals. This slide is why we're having this conversation, because what happens in one quarter is just noise compared to the power of staying invested. Look at these one-year numbers. US stocks returned 17.15%, but emerging markets returned 33.57%, and international developed markets gained 31.85%. That's the kind of performance that transforms portfolios. But here's what I really want you to focus on: the consistency as we move down this page. Over 5 years, 10 years, 15 years, and 20 years, every single asset class shows positive returns. Even that 5-year US bond return that's slightly negative at negative 0.36%, when we extend it to 10, 15, and 20 years, it's positive. This is the mathematical reality of long-term investing. The market rewards patience. Those 20-year numbers, 10.77% for US stocks and just under 6% for emerging markets, those represent millions of investors who stayed the course through the 2008 financial crisis, through COVID, through every scary headline and temporary downturn. The question isn't whether markets will be volatile, they will be. The question is, will you be positioned to capture these long-term returns? This final slide tells the story of 2025 in real time, and I think it perfectly illustrates why we invest the way we do. Notice that chart in the upper right. That's 25 years of steady, consistent growth, not a straight line up, but a clear upward trend. The market ended the year at record highs with that one-year return we discussed. But look at what happened along the way. Just looking at last quarter in October, we had headlines about government shutdowns and funding lapses. In November, there was election uncertainty and consumer sentiment falling to record lows. In December, we saw concerns about inflation and unemployment rising despite job gains. Here's my point. At any given moment during 2025, you could have found a reason to panic and sell. But investors who stayed invested through all this noise captured that 17% return in US stocks and those spectacular 30+% returns in international markets. This is your portfolio working exactly as designed. We diversify across asset classes because we can't predict which will lead in any given quarter. We invest for the long term because that's what the data overwhelmingly supports. And we stay disciplined through volatility because that's the only way to be in the market for days like December 31st, when stocks closed out a record-setting year. Your financial plan isn't built on hoping for perfect quarters. It's built on the mathematical probability that disciplined, diversified investing works over time.
So here's what it all comes down to. Q4 delivered solid returns, 2025 was an exceptional year, and the long-term data continues to prove that disciplined investing works. Markets will always give us reasons to worry, but your financial success isn't determined by any single quarter or headline. It's built on staying invested through all of them. Thank you for your trust and confidence. If you have any questions about your portfolio or financial plan, we're always here to help.